What a pleasure it is to be here. This, I think, is probably one of the most important panels of the day because it is very rare that we get assembled HMT, so the Treasury, the Bank of England, and the FCA, the regulator, in one sitting. So we're going to really blast through 40 minutes in order to get the benefit of the knowledge of the three people sitting to my left on what's going on in the crypto and digital asset space. I've experienced often an unrealistic expectation of regulators from industry in my career. But that's equally matched with experiencing regulators who often have different expectations from industry. And so that's one of the reasons we set up Global Digital Finance, to convene the industry, to develop standards and codes of conduct to a professional level where we can demonstrate to regulators that we take seriously their concerns, whilst at the same time opening up a trusted dialogue with regulators to allow them to off-market and in a confidential way offer us any sort of guidance or be able to provide to them any data or outreach that they think is important to things. And I learned a lot about that when I was the CEO at Innovate Finance. I had the privilege of chairing the industry sandbox consultation under Chris Woolard's watch as the regulatory sandbox was going in place. And I've just been pretty impressed with what we've got going on here in the UK. So I'd also like to say that thanks to CryptoCompare, who are one of our GDF founding members and on our advisory council for hosting this. This is probably, I think, one of the most extraordinary events of people who are really in the crypto and digital asset space that are doing things. So just quickly now, a year is a long time in crypto. Last year at this time, we were at the OECD arguing for digital asset tokens, following the SEC, how we rule, and educating policymakers, and particularly looking at digital assets for new capital formation and everything that we call at the bottom of the S-curve. And we were really encouraged because ESMA really took a very different position to the SEC by saying, well, look, securities are a bit different in Europe, so we're going to look at what we call the perimeter of that regulatory sort of guidance in a different way. This year, a year later, we've got Kik announcing they're going to sue the SEC and raise money to mount a legal case. And while they're doing that, the SEC has decided that they're going to sue Kik, which is absolutely bizarre. And there was a big focus on advocacy work in Europe in the crypto digital asset space, while the US really works out what it's going to do. Last year at Money 2020, I had the privilege of having Martin Etheridge on a panel of central bankers where we talked about crypto, and broadly the narrative was central bankers didn't have anything against decentralized cryptographic currencies, but didn't have a use case for them themselves. And more importantly, the FSB viewed that crypto, particularly cryptocurrencies, didn't pose any systematic risks. This year, the narrative for particularly Bitcoin and crypto seems to be as an asset class to risk adjust you against central bank or governments, and something that isn't designed for mass adoption. And the Basel Committee has come out warning on crypto assets, but if you read it carefully, is particularly warning as institutions start to adopt them. And so last year, Tier 1 banks really were talking about setting up crypto trading desks until crypto winter came. Jamie Dimon did a 180 on his own view of crypto. And this year, we've got R3 Corda vibrant in the market, the utility settlement coin, JPM coin, and now Facebook. And so lastly, I think going into the G20 last year, we were getting a lot of back-channel input saying, look, the G20 are concerned around decentralized exchanges and are looking at coming down heavily on them, to which I think our point was, my goodness, there's a single bank in Estonia that just laundered $250 billion. And I think the whole crypto market cap was half of that at the time. Is this a sensible or proportional view to take? I think in particular when, if you listen to security people, they are very, very big fans of the public blockchain. So we're off to FATF and GDF, we're off to Osaka with GDF to focus on FATF and the AML and 7B rule. we're keeping up our advocacy work. And the thing that I've learned, and I'm delighted we've got the three here today, three folks that I respect very much, is that we might not always agree. We might have very different views around where the industry should be going, particularly in the context of retail protection. But we always have an open and rational dialogue, whether we're on panels or whether we're doing advocacy work. And it's something that I think is really quite extraordinary to the UK. So welcome to my panelists. I've got Samantha Emery from the FCA, who's actually head of innovation. I've got Gillian Dorner, who's the deputy director of Treasury. And we've got our friend Martin Etheridge, who's the head of division for the Bank of England. Okay, now, who's going to kick off today?
Me.
Great.
Thank you, and thank you very much for having me here today. It's a real pleasure to come and speak to you. I'm just going to start off by giving you an overview of the government's approach to crypto assets and the work of the Cryptoassets Taskforce, which involves the Treasury, the bank, and the FCA. But firstly, for some broader context, the government set out an ambition to be the world's most innovative economy and to maintain its position as a world-leading financial centre. And it's very much through this lens that we see our approach to crypto assets, seeking an approach that balances both the risks and opportunities to deliver on this ambition. So recognising the need to look into our regulatory approach to crypto assets, we announced in March last year that we would launch a task force with the bank and the FCA to consider these issues, and we published the report in October last year. The report essentially covers three key questions. First of all, how do crypto assets interact with the current financial services regulatory framework? And as you all know, there is no one type of crypto asset, and with such wide-ranging characteristics and uses, the first task of the task force was to develop a framework of type and uses to help clarify how existing regulation might apply. Secondly, we looked at the risks posed by crypto assets, and we identified risks in a number of areas. First of all, the risks to consumers who may buy unsuitable products without understanding the risks properly, potentially facing large losses. Then we identified the risk of illicit activity, which Lawrence has covered in terms of our anti-money laundering response. Concerns around market integrity, and then, as Lawrence has already mentioned, the potential threat to financial stability, although the bank has recognised that is not currently an issue. And finally, we looked at what the benefits of crypto assets might be. And although this may not go down particularly well in this room, we concluded that the current generation of crypto assets don't necessarily deliver significant benefits in financial services and other sectors. However, the technology is still in its early phase of development, and we recognise that there really are some potential benefits to be reaped there, and probably most obviously in the area of cross-border payments, but also potentially in terms of capital raising. So the conclusions of the task force were firstly that government and the financial regulators should prioritise mitigating some of the risks of crypto assets as they currently exist, and then to also encourage innovation and responsible development of legitimate DLT and crypto assets related activity. And this is really at the heart of the government's approach to this, which is about making sure that we are able to tackle the risks to harness the potential benefits that might come further down the line. So in terms of next steps, I'll just say what the government's planning on doing on this front, and then hand over to my colleagues from the bank and FCA to say a bit more about what they're doing. But really what we're looking to do in government is, first of all, address the potential sort of illicit finance risks around implementation of the 5th Anti-Money Laundering Directive. The consultation for that closed on Monday. Lawrence admitted that they got theirs in right at the last minute. So we haven't actually looked at the responses yet, but in that we propose going a bit further than the 5th Anti-Money Laundering Directive. So hopefully you'll have all had the opportunity to input into that. And then secondly, government is looking at where crypto assets don't fall within the current regulatory framework for financial services, what we might do with that. And we are aiming to release a consultation paper later in the year to seek views from you on what direction we might go in. So I'll stop there, and I will hand over to, I think, Sam, to talk about the FCA's approach.
Yeah, absolutely. Thanks, Gillian. So in terms of what we've been doing to support the work of the task force, we've probably got 3 main things to talk about. Earlier this year in January, we consulted on guidance on crypto assets in relation to the current regulatory perimeter. And later this summer, we're going to be publishing our final guidance. So basically, this will mean for market participants, they have clarity on determining whether or not the crypto assets that they have are within or without the regulatory perimeter. The task force, as Gillian mentioned, identified 3 major harms from crypto assets, and one of those was around harm to consumers. So as part of investigating that further, we actually commissioned 2 pieces of research to understand better the consumers who are getting involved in crypto assets, how they were behaving, what was actually motivating their engagement in the crypto market. So we had one qualitative piece by Revealing Reality and a quantitative survey by Kantar TNS, both of which are available on the website. So the research actually reiterated the 3 harms, but it changed our views on the scale of the harm. And I'll talk a little bit more about what we saw. So only 3% of people surveyed had actually ever bought cryptocurrency, and 73% of the UK consumer population either didn't know or couldn't accurately define what a cryptocurrency or crypto asset was. I think half of those who'd actually bought crypto assets had spent under £200, and a large majority of these had said they'd self-finance, so they weren't taking out loans, remortgaging, any of those sort of scare stories that we had heard about. I think there's quite an interesting soundbite in there on what someone said they would have spent the money on had they not bought the crypto assets, and I'll leave it with you to dig out what that was. We also found that consumers who either bought or researched crypto assets saw it as a way to get rich quick, fundamentally. 1 in 5 consumers actually didn't complete any research at all or due diligence prior to buying crypto assets, and instead they were looking to friends, social media advisors and influencers as motivators for buying the crypto assets. I think one of the quite telling quotes that we got from the qualitative research was one guy who actually said he asked his stepdad and his brother as to whether or not he should invest because they love money. So I think that's quite telling around the maturity of consumer understanding in the market. So why is this important? Understanding the scale and the nature of the harm and opportunities actually allows us to be proportionate in our response. This summer, we're going to consult on a potential ban on selling, distributing, and marketing derivative products that reference certain types of crypto assets to retail consumers. This is a situation where we consider that both the product type and the underlying assets may be unsuitable for the consumer base that we've been talking about. So I think that's sort of the brief tour of what we've been doing in the FCA. So I'll hand over now to Martin.
Thank you. So great to be here. Always a pleasure to be on a panel with you, Lawrence, and obviously my colleagues from the other authorities of the Cryptoassets Taskforce. A brief bit of context to the work of the Bank of England in this area, and I think even it's worth going right back to the beginning as to the role of the central bank. So the role of the central bank is both to set policy, so set policy to deliver objectives around monetary stability, financial stability, via the regulation of the banking and insurance sectors, but also to provide our own services. So we issue money, we issue physical banknotes to every member of the public, and we also operate the reserve system which underpins the transmission of monetary policy and the systemically important payment systems in the UK. Our real-time gross settlement system settles around 1/3 of UK GDP every single day. It underpins the core of the UK systemically important payment systems. So when it comes to crypto assets, our primary focus is on monetary stability and financial stability. The first question, therefore, is, are there any crypto assets out there that are performing the functions of money that we need to care about? And in that context, our initial assessment and our continued assessment is that there are not those that are currently performing the three broadly accepted functions of money. In particular, still significant volatility to be effective stores of value or units of account, and no meaningful use of crypto assets as mediums of exchange in the UK. So then thinking about financial stability, and that's really the focus of our work directly related to the Cryptoassets Taskforce. And Lawrence referenced work within the Financial Policy Committee of the Bank of England last March, who looked at the crypto assets market and concluded that there were no material threats to UK financial stability at that time, and that continues to be the case. That was consistent with a global consensus delivered via the Financial Stability Board that there were no material threats to global financial stability associated with crypto assets. Now, that was a point-in-time assessment. It's not to say that there couldn't be financial stability threats from crypto assets in the future. And so this is an area that needed to be kept under review. In particular, are there crypto assets that are being used as means of payment? Payments are a critical economic function of the financial system. And so if there were significant uses of crypto assets as a means of payment, that would be something to take very significant interest in. Secondly, are there material linkages between the crypto assets markets and systemically important institutions? So institutions who are providing critical economic functions via the financial system to a degree that is systemically important. And again, worth looking at, but at this stage we don't see any material exposures or linkages between UK systemically important institutions and crypto markets. And then lastly, are there linkages to systemically important markets? So again, those markets that underpin critical economic activity in the UK provided by the financial system. And again, worth looking at, but at this stage, it's not something that causes us particular concern. Now, in terms of what we are currently doing, that ongoing monitoring is the primary focus, but we are specifically doing some work internationally, particularly with the Basel Committee. So the Basel Committee on Banking Supervision, global banking supervisors getting together to agree the approach to take to the linkages between the banking system and crypto assets markets. You may have seen, maybe not all of you will have seen, but maybe one or two of you will have seen that the Basel Committee did put out a statement fairly recently that articulated their expectations on how banks should engage with any crypto asset activity they were performing. That's a pretty consistent message with that the Bank of England itself put out again last year, broadly ensuring that banks are resilient to the risks associated with crypto assets, but not looking to completely stop that activity. Clearly, there is innovation here. There are deployments of the technology that could have significant utility in the future. So it's striking a balance between ensuring that the risks are understood and mitigated, but allowing effective innovation to take place.
And so what a difference a year makes. We've got not just the Treasury crypto panel that all three of these institutions are involved in, I believe we've had 3, if not 4 consultations if we include the Global Financial Innovation Network consultation, which was very important to us in global digital finance, in that we felt GFIN certainly would offer an opportunity for multi-jurisdictional testing of different use cases, which is exactly where the crypto and digital assets community is. So there's a comprehensive amount of work that has gone in just in the last year in understanding the way that this industry works and the potential risks or opportunities, particularly for consumers, that the crypto and digital asset space really does offer. So I want to start with you, Sam, and I mean, how would you put into context how you've been able to either adapt to or respond to all of the things that are going on in the global landscape in the context of your own consultation work and what you're doing at the FCA with regards to regulation in this space?
Yeah, absolutely. So I think ultimately the FCA looks to get out to the market quickly and take quite a sort of test and learn approach as it's developing its policy. The engagement means better understanding, the understanding means better policy. We know that there's no value in sticking our heads in the sand on these issues and these changes. But I think the key thing to point out is we consider ourselves as technology neutral. And I think we always look at the underlying activities rather than the technology that's used when we're considering how we regulate and how we apply our regulation. And I think, you know, Lawrence was at Money 2020 last week, as possibly with some of you. And there was quite an interesting soundbite from one of the panels, several innovation figureheads on the stage, talking about innovation. In this context was retail banking. But someone just stopped and pointed out that actually, for the most part, we'd just gone from branch to telephony to online to mobile. But fundamentally, nothing had really changed in terms of the activity that was being done. And I think this here in a nutshell is actually one of the benefits of being tech neutral. You can see the true extent of the change. So when I think about it in the global context, Lawrence has already mentioned the Global Financial Innovation Network, or GFIN. So we're working with over 35 other regulators and organizations to better understand trends across the financial services sector worldwide, and this obviously includes the rise of crypto and DLT. Interestingly, as part of this, we are running cross-border testing. We have a global sandbox. We have recently announced the first cohort, and this includes a number of firms who are undertaking DLT-related solutions, testing across multiple jurisdictions. And we're working in conjunction with the firms themselves and the other regulators to support them in developing their test plans, and if their test plans are approved, actually supporting them through the testing phase itself. So this is another one of the ways in which we actually learn through different kinds of engagement. I think GFIN is the next stage and an expansion of what has been quite a proactive approach to our international engagement. We have around 11 cooperation agreements with other regulators overseas. So it's really just part and parcel of a continued narrative that is building that shared understanding and understanding how different technologies are being applied and maturing in different markets worldwide.
I'd like everyone to pay attention to something that's important, because we're always asked, particularly in the crypto and in the digital asset space, you know, gee, look at what's going on in Gibraltar, Malta, Switzerland and Crypto Valley, which, you know, a lot of our colleagues have done some amazing things here. But I think to my knowledge, the FCA is the only financial regulator on the planet that has both a conduct mandate and an innovation mandate, which came out of 2013, post-financial crisis. And the regulatory sandbox, the innovation hub, was an important part of that, and now an extension to GFIN in involving 30 other regulators. So although I'm often on the side arguing for crypto, decentralized or permissioned digital assets, infrastructure, and trying to move the dial and get things going forward on that front, A lot of the tools are being put in place to help industry to try to accelerate that. And again, I bring particular light to GFIN because the first cohort for GFIN is open, isn't it? So that is a particular good utility and application for multi-jurisdictional crypto or digital assets use cases. Martin, can I pick up things with you next? And again, our job is always to be technologically, secular or not particularly advocating. Technologically agnostic, Tina always reminds me I should call it rather than secular. And so I was actually inspired with the session we did with central bankers last year at Money 2020 because, and I don't want to paraphrase it, Martin, but the conclusion was, look, we've got nothing against decentralized cryptographically generated assets. It's just that we don't have a great use for them with our policy job, which is all around monetary fiscal policy and creating something useful in society, which implies mass adoption. And so I thought that was actually very helpful and useful, particularly in the context of some of the very negative narrative kicking around at a policy level with things like Bitcoin or any of the cryptographic currencies last year. But can you give us an idea, Martin, when it comes to the Bank of England? And I know you touch on RTGS, which is actually, I think, important to a lot of this as well, but how you've dealt with crypto and digital policy, and even maybe give us a bit of an insight of where things like digital are going with currency, because you were a specialist in this area.
Yeah, sure. And I think it's worth maybe just very briefly touching on the regulation side. So just to reiterate, we regulate the banking system, we regulate the insurance sector, and we regulate the systemically important payment systems. And it's important in the context of that regulation to ensure that you're not stifling innovation, particularly with the PRA. It has a secondary competition objective to ensure that it is facilitating effective competition. But I do just want to pick up on the infrastructure point, and particularly RTGS. So winding back the clock, maybe 3.5 years, we initially identified that we needed to understand some of the specific technological developments that were taking place in the market, specifically with respect to blockchain and DLT. And we set up our FinTech accelerator, as we called it at the time, with a view to running dedicated proofs of concept with the industry, with industry participants, to understand the applicability of that technology to central banking activities. It was at the same time that we were making a decision to go through a renewal program for the real-time gross settlement, the RTGS service. We did run a proof of concept. We know that it is feasible to exchange assets on a DLT. We know that that asset could be central bank money, but we concluded that in terms of our objectives around stability, it wasn't mature enough for us to use in our own infrastructure at the heart of the systemically important UK payment systems. So we are going through a renewal program for RTGS, and we have committed that whilst we won't be using DLT ourselves, we want to ensure that we can interoperate with innovative solutions, innovative technologies that are and could potentially be deployed in the private sector, both now and in the future. So we have run specific proofs of concept under the auspices of that RTGS renewal program to ensure that we are not behind the curve and we can have confidence that we are setting up an infrastructure that is not only fit for today, but is also fit for the future. So I think we've got a history first via the accelerator brand. We don't tend to use that anymore because the proofs of concept that we run now tend to be more closely aligned to the core projects that we have ongoing, and we were getting inundated with quite a lot of interest in working with us, but we have to be clear that we are a central bank and we are therefore very interested in those innovations that are relevant to us in terms of our own responsibilities. But I think, you listen to the governor of the Bank of England, listen to the language that he uses around embracing innovation and trying to enable the technological development. A lot is happening and a lot continues to happen, and we want to ensure that we can support that innovation.
Super. And last but not least, moving on to Treasury, again, what a difference a year makes. Having set up the crypto assets panel, done a consultation, produced a report, and then now focused on an AMLD 5 consultation, which is hugely important. I just want to, impress upon everyone the challenges here, particularly when you've got the Financial Action Task Force, FATF, and something called the 7B or travel rule going on at a global level. Some of the complexities of trying to bring together policy when it comes to things like AML, because jurisdictional regulators have not pressure just from industry or consumers coming up, but from global standards bodies coming down, like the FSB, FATF, and IOSCO. And I think, Gillian, if you could just give us an idea of how the UK government and Treasury is, positioning itself to sort of think about the global nature of crypto assets, the benefits to the UK and economy of the community, but how you balance those external global pressures and demands, because we're always saying, look, if everyone doesn't cooperate in a multi-jurisdictional way, we're going to get arbitrage somewhere in the system.
Yeah, so I mean, absolutely, the global picture here is absolutely key. And although we're taking action domestically, we are taking just as much, paying just as much attention to what we do at the global level, given the risks of regulatory arbitrage in particular. And so, the FATF standards are a really positive thing here, and something that, I really encourage industry to work with FATF on that, and also to input into our implementation of the 5th Anti-Money Laundering Directive. But also, the FCA are engaging, as Sam has already set out, with regulators worldwide. We are also playing a sort of leadership role on this issue within the G20 and within the FSB to make sure that there is a continued dialogue to bring countries together to discuss the challenges of crypto and DLT in financial services, and make sure that we come up with a globally coordinated solution. But as you say, Lawrence, it's not easy. So at the same time, we are also meeting with other finance ministries from around the world to learn lessons from them and to discuss with each other our approaches to ensure that we are also aware of what other countries are doing, and ensuring that we take that into consideration when we establish our own approach. But the one thing I would say to finish off is that, this is, as somebody within the Treasury who's responsible for our regulatory framework, crypto is a challenge to our regulatory framework, to the traditional forms of financial regulation, particularly because it is moving so quickly and changing and evolving so quickly. And as I'm sure you're aware, our regulatory framework doesn't necessarily evolve quite as quickly as that. So the key thing here is that there is an ongoing dialogue between countries, but also between the government, between the regulators and the industry, to ensure that we are taking a proportionate and practical approach.
Yes, well, I love it, and I was reminded of Lord Tony Giddens, who would say that digital's moving faster than social anthropology or people can. To which I always add when he says this, yes, and it's being fueled by very cheap money. So it's not just consumers or regulators. Quite often, it's people in industry that are having a difficult time keeping up with that pace of change. So that brings us to the end of this panel. I think that if a year is a long time in crypto and digital assets, and we were looking forward to the next year, I would encourage this audience to pay particular attention to how firms are looking at the UK and Europe for constructing policy around crypto and digital assets. This is an important part of the world, and I think it certainly puts the challenge on the policy and regulatory environment, but the industry is certainly very engaged in this part of the world. So we might be talking about greater policy developments next year in Europe when we have a look back. I'd really like to thank my panelists. Samantha, always fantastic. And Martin, Gillian, great to have you all three on a panel. And I'd like to thank you, the audience. Thank you.
Thank you.